We're at the World Economic Forum, Davos 2011, a variety of issues that have come to the fore, from questions on monetary and financial management, sustainable investment, climate change, and of course energy security. We're seeing a buoyant oil price, and that signifies to some extent a modest pace of economic recovery. Africa has some of the fastest growing economies present on the African continent, and this raises the question as to the affordability of energy and investments in the sector. Wale Tinubu is a young global leader, also a major investor in the gas and oil space in Nigeria, and rapidly expanding his footprint into the rest of the African continent. Thank you very much to the CEO of Oando for being here. Your views on the World Economic Forum and whether all issues about energy security are being dealt with adequately?
I think the World Economic Forum tends to, or is, in my own opinion, improving in its capacity and its quality. And the new theme for this year is the shared norms for the challenges facing an even more complex world today, and we're enjoying that. I think in terms of energy prices, you said it all, it's on the increase. And the good news, though, is that Africa is a net exporter of energy.
Yeah.
So I think our challenge has been how to create systems to actually feed the internal market, as opposed to export the bulk of our energy in form of gas, LNG, as we do, and crude to European and Western economies.
On that theme, I mean, the big issue is that some of the investors within the energy space in Africa are multinationals. And when are we going to have African companies investing in that sector?
It started already. I mean, we at Oando PLC, we've been able to build in the last 10 to 15 years a $3 billion corporation that's right across the value chain. We're in the downstream, the midstream. We're building pipelines across connecting cities, taking gas, which is normally fled, into industries and creating power opportunities, drilling for oil as well and exporting them. And in the process, creating wonderful job opportunities and bringing back a whole bunch of Africans who are in the diaspora back to Africa to work in the African community and do what they've done best for the rest of the world.
I mean, what we've seen in recent history, especially in the worst of the post-recession era, were dwindling investments in the oil and energy space because the price didn't support the capex that's needed for investments. That situation is changing a little bit, but you don't get a sense that there are further investments. Is that a correct assessment?
No, it's wrong. I mean, Nigeria is receiving substantial investments. There's $15 to $20 billion a year in capex going into Nigeria. Angola is receiving something in the region of $10 to $15 billion every year. Gabon, Cameroon, the other African oil-producing countries. It's increasing substantially. And oil prices where they are is only enabling those investments to increase, as well as the fact that most of the finds in Europe and Asia and the US are all deep offshore finds, which is very, very expensive to produce, as compared to the finds in Africa, which is still relatively cheap to produce.
I mean, what we are seeing also in Nigeria and generally in many other African economies is the privatization of state assets in the energy space. Nigeria's got the petroleum industry bill to regulate the energy sector, as we call it in South Africa, and then electricity is then another area where we're seeing also privatization, and the two areas are interlinked. Are we likely to see a lot of money flowing in there?
Definitely. Those global opportunity is substantial. In Nigeria alone, on the power sector, there's a 10,000 megawatt shortfall, which if you converted that into capital expenditure would mean something like $10 billion needs to be invested to sort out that problem. And what is even interesting as well too is that local corporates are now taking off. There's been reform. We've had pension fund reform, which has created a substantial amount of long-term capital. The banking sector is really exploded to enable local corporates be financed, and those local corporates are in turn now doing JVs with international corporates, and that's what I like to see. I don't particularly feel that the development of the continent is going to be driven entirely by multinationals coming into Africa. We've got to be able to create our own traditional homegrown corporates who have African solutions for African problems. We're taking the best of the world in the process, best world-class systems, the capital that is available from international financial institutions and also the partnerships for multinationals.
I think also a big challenge, and also with Nigeria having launched its sovereign bond internationally, although a small paper, is the cost of borrowing. If Nigerian risk is priced somewhere in the region of 7%, which is not really bad, but you know, it could have been a better one if you've been borrowing at the rate of about 4%, it means the cost of capital in Nigeria are going to rise.
Yeah, cost of capital is rising, but I think what we've done, our cost of capital is high, but I think with the mobilization of savings, local market has been a big plus in Nigeria. And the creation of, as I mentioned, the pension fund reform, which sees everybody contribute 7% of their gross income into a long-term pool. Right. And also, fiscal discipline between governments will create a situation where we can have long-term reduction in interest rates. And I suppose the more we export like we're doing, we're bringing a good influence into the country.
So back to if that's the message you've been putting across, is the audience receptive to a new kind of Africa?
Very receptive. I think the audience understands that Africa is changing, it's democratizing, corruption is down, investments are up, the local economies are booming. It's the best growth rate in the world today. Yeah. Most African countries are doing between 5 to 10% growth, and not entirely commodities driven. A lot of it is being driven by the emergence of a middle class as well, which is consuming goods and services. And we're doing well, and the message to the rest of the world is come and invest in us.
Okay, we'll leave it there on that poignant note. The views there of Wale Tinubu, the CEO of Oando PLC, and also a young global leader, coming to you from the World Economic Forum, Davos.